Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about news in accounting, finance, economics, or maybe none of those things. But we always talk about topics from the perspective of accountants. And we've got three accountants having that discussion today. With me is Tammy Hess.
Hi, everyone.
Charlie Ziegmund.
Thanks for joining.
And I'm Ty Carr. Well, what do we have on deck today? Well, we're going to talk about how the state of Maine wants cannabis business operators to be residents. We're going to talk about Bank of America overdraft fees going down. And then I'm going to give another installment in my series on craft spirits finance about GL, that's general ledger software, and operational accounting. Then we're going to talk about regulatory delays on marijuana consumption lounges in Vegas. And finally, we're going to talk about wiping away tax penalties. All right, well, let's get this started. I'm going to kick it over to Charlie.
All right, so I've got an article we can talk about from Forbes called Federal Court Strikes Down Maine's Residency Requirement for Cannabis Business Owners. And so I thought it'd be kind of interesting to talk about, as the title said, Maine wants people who are running cannabis businesses there to be residents. And that counts for people who are directors. Let me see what it said. 1 second. It mentions which parties that are related to the business have to be residents. And it was basically anyone who had an operational decision-making kind of a role inside of that entity. And so what happened was that the largest marijuana company in the state, which is called Wellness Connection, has basically filed a lawsuit saying that this restriction would be would limit interstate commerce and would be unconstitutional. And it cites a clause called the Dormant Commerce Clause, which basically prohibits states from passing legislation that would restrict any kind of interstate trade. And so it's gone through a couple of layers of appeals and whatnot. And ultimately, the court has basically said that we're not going to do that. We're not going to force them to uphold that law and have people be residents of the state. And so I kind of want to get your guys' take, because to me, where you are a resident of versus where you operate are two very different things, and don't have, at least in my eyes, a lot of connection between them. And this law would really make it so that is the case. And so I want to get you guys' take on whether or not that is fair, or maybe there's an element to it that I'm not really thinking about that would make sense to have only residents be involved. What do you guys think?
Well, I think the intent of these kind of rules is to try to keep the industry and the business local and small. And I think the fear is that you're a state that has made it legal, and you open up the doors to anyone coming into your state to operate that kind of business. You maybe attract a lot of people who aren't connected to your community and are in an industry that is still, let's face it, controversial. Right. So you're attracting a bunch of people from an industry that's controversial that aren't even in your community. And I think that's the downside of it. I think the other side of it, though, that I think that I've seen is that enough states have had it legal now long enough that we've got some larger national players that are more professional and more corporate, and maybe that's not something you want in your state. But on the flip side, I think the larger corporate players that work multinationally coming into your state could maybe help your local industry grow up and be more professionalized. And so I think there's potentially some positive there of leaving it more open. And so I can see both possibilities there.
Yeah, I'm in the same boat, because that's exactly what kind of got me thinking when we were looking at that article. So the fact that it's not legal in all states. So if you have a state and you've legalized it, and then you kind of want the the benefits to kind of stay in your state, or the people and the support of the community, like to Ty's point and all that stuff, to stay within the state. But you're right, if we exclude that, there are some downfalls of not being able to share the information from those in other states. Also, what's also interesting to me though is that for the money then would go into another state that potentially isn't legalized. And so you're not seeing the real, indirect kind of benefit of having that revenue source stay within that state altogether. So I can see why it happened, or why that it's been kind of pushed for that, because it does make sense in that kind of situation where it is kind of a controversial, line of business or business opportunities for folks. And if you are a state that went through and accepted it and support it, you probably do want it to remain in your state all the way through. So it's interesting.
No, that makes a lot of sense, and that's kind of presents different, viewpoints on the issue, and those are some things I hadn't really considered. And so, yeah, no, I appreciate you guys sharing that. Do you have another article we can talk about, Tammy?
Yeah. So our producer, Ethan, shared a clip from the Daily Show that was recently posted on YouTube, which I highly recommend everyone to watch. To take it's pretty funny in a lot of ways, but it also inspired me to find an article regarding overdraft fees. So as we know, banks have been charging overdraft fees for when you don't have money to cover the payments, and fees can be associated with the bank covering the funds for the cost when they actually pay it on behalf of the person who doesn't have the money, or it could also be the cost of returning the funds or canceling the payment altogether. So these fees can really add up, and sometimes it can cost more than the original transaction that was in dispute, which has been a point of contention from the public as well as from Congress for years. Back in 2021, banks started to make some changes to their overdraft fees, and it's having an impact. So that brings me to the article that I found, which was from US News, and it reports that Bank of America's revenues from overdrafts have dropped roughly 90% from last year as a result of reducing the overdraft fee from $35 to $10 and eliminating the fees for bounced checks. Now, before the change, Bank of America was known to be the highest of collectors of overdraft fees, earning roughly $1 billion on those fees in 1 year. So they also, just so you know, they do now offer accounts that don't even allow customers to overdraft their account. So they aren't, there's never an issue there. But in terms of what the changes that banks are making, Bank of America is now being seen as taking major steps and more so than those of other banks. Now, I would say that this has been a long time coming, and it probably has a lot to do with the fact that back in 2015, banks had to report the amount of revenues associated with overdraft fees to regulators, and the public started seeing how much money was actually being collected from customers, on these overdraft fees. And we're talking obviously billions of dollars here. The article mentioned that more banks are making the effort to reduce or eliminate overdraft fees with the explanation that they can earn big profits without charging fees on customers' account, although they didn't give any more information regarding how that could be. So I have a few questions for the group. One, do you see other banks, following Bank of America's lead in terms of really making big reductions in the fees or eliminating the charge for the bounce checks? Also, do you guys think that this is enough? And how do you think banks are earning their big profits, as they say, without charging these fees?
I would say that in the banks that I've worked with, I have not seen a big change in that policy in my direct experience, but it may be because I haven't ran into as many overdraft situations. But I mean, for me, the entire concept of an overdraft fee is there needs to be some amount there. So I agree there should be something, but it's like the amounts that they choose are completely arbitrary. And it's really frustrating, like you said, when you have a really small transaction that puts somebody into overdraft, especially if that overdraft spurs more overdraft fees as it kind of sits negative in the account. And so it's just a very predatory form of fees, is what I feel. And it's also kind of interesting because there's limits on how much interest a bank can charge on an amount in any given day, but the overdraft fee basically makes, pretty much puts you into the same outcome that you would have if you had a usurious or a usury rate applied to a small amount being lended. Because like you said, you could go $4 over and get hit with a $35 fee. And so, I don't think I've seen a lot of big strides, and I don't think that I'm glad they're making changes at Bank of America, because I think this is really predatory type of fee. What do you think, Ty?
Yeah, I wonder if it may just be temporary, because I feel like we've been through this before where banks get called out for high fees and their fees go down. And then, and I think that's what happens is that like right now, because they're under the spotlight, maybe they're reducing their fees. And then, 5 years from now, they'll just silently have increased the fees back up, which is it. I mean, that's indicative of what companies do in order to like appease something that is in the spotlight and to avoid regulation. And so, better that they reduce fees and that, that takes the pressure off, and then there's no regulation on it, which allows them to turn around and then slowly raise them in the background again later. So, maybe they're not as mischievous as I would be, but that's what I suspect may be part of the plan.
Yeah, I hope not, though, because I do think that too, what Charlie said, these are very predatory fees and structure, and it really harms those who don't have the funds to do that, and I think in the video that Ethan did share, it's, they had they showed where it's like they had $2 transactions, but they had like 5 of them and they got $35 a pop per each of those transactions, right? And so they can really add up. And I know that the other thing too is like you can be a person who has sufficient funds in your bank account, you cash, you accept a check from a friend or from somebody else, and then that bounces, and then your bank charges you a fee for having to return that check, and that can be frustrating, right? So I do think that the need for the change is definitely there, and and I hope that other banks follow suit. But I do agree with you, Ty. There's going to be other ways. It's not that Bank of America is declined in their total revenue by 1.6 million or whatever, that $1.2 million, whatever it was. They're getting it from somewhere. And so either maybe it's getting more accounts in because people are happy about the type of accounts that they offer that don't even allow you to go to an overdraft situation, which is actually really quite smart, I think, on that point. But maybe they're charging monthly fees for that, or maybe they're doing something else. But it is a very interesting thing, and hopefully we'll see more banks follow suit, and hopefully that it'll be that way for years to come and not just be a temporary thing until they're out of the spotlight. But the spotlight has definitely been on them, and with the Daily Show, I think it'll be even more so of a spotlight. So, Ty, you have our next article?
Yeah, so I'm gonna share my screen and craft spirits finance series that I've been doing on these episodes. If you've seen me do this, if you've watched prior episodes, you've seen that I've done a segment on this in the last few episodes of this show, and they're kind of building on each other. So if you like this one, I would encourage you to maybe go back, watch other episodes, and see if there's other good nuggets in there about craft spirits finance that might interest some of you out there in our audience. So what today's presentation is going to be about is accounting GL software and operational accounting. And I put this under the header, my next few presentations, this one and my next couple presentations at least, will be about processes and tools. And I kind of lump that together because, an accounting process is something that we orchestrate or that we manage as accountants, that we are running for the purpose of the business or the organization to get things done operationally for the business, or to make sure that the accounting, everything gets recorded, right? And the tools that we have these days mean that those processes are often done, most certainly are done through some sort of software, right? So software and the tools they're a part of the process, but I think where people conflate that is that they sometimes jump to the idea that the software is the process. And I would caution against that, and always remember or consider the paradigm that that software is a tool. It's a tool used in the process. And the primary tool that all businesses are going to have to use in some fashion is what I refer to as general ledger software. More commonly might be thought of as accounting software. So I'm going to talk about that a little bit, and then I'll talk a little more about some operational accounting considerations, process and tools that we would see in the craft spirits industry. So I'll start with general ledger software. Then in terms of the operational accounting, I'll talk a little bit about paying vendors. I'll talk about other expense management, like what you do for like expense reports and reimbursement type stuff, how you go about invoicing customers. And then I'll talk a little bit about inventory tracking. What you could easily throw in here, would make sense to throw in here in terms of operational accounting, would be payroll processing. I'm not going to talk about that today, though, because I've got another presentation coming down the road on this related to compliance issues in general, and I'm going to throw payroll processing into that discussion. So accounting and general ledger software. So this is, some of this discussion, as with my prior presentations on craft spirits, a lot of these points could be made in a broader small business community as well as in the craft spirits community. And so when you talk about general ledger software, or GL software for short, we've got small business systems that are known by their brand names by many small business operators out there. I think people are going to know, if you say QuickBooks, they're going to know, oh yeah, QuickBooks, that's something I use to do accounting in my small business. Another similar system out there that's popular in Europe and in Australia, New Zealand is Xero. It's also used, I'd say, probably second runner up to QuickBooks here in the US. And so it's kind of in the same category, the same class of small business general ledger software, accounting software. And, the benefits of these softwares, I'm a big fan of these softwares, because the benefits of these softwares is that they're relatively low cost and they don't have a lot of sophisticated IT requirements. And so that's really important for a small business. We, even as an accountant, myself and us here at TCA, we run a small business. And so I recognize how helpful that is to have a low cost general ledger system that we can run our business on and doesn't require a lot of IT consulting work to go with it. It's easier to use for accountants with less experience. And let me elaborate on that a little bit. I talked in my last presentation about people first, about how it's important to have the right people. And I could expand on that point and bridge it over to this discussion, because when you have the right accountants, the people with the right kind of experience and expertise, they, a real accountant, a good accountant, has a broad understanding of accounting, of how accounting works. And that is helpful to moving between softwares, right? Like if you understand the accounting paradigm, if you understand the underlying math, if you understand the underlying the underlying processes independent of any particular software, then you can move between softwares easier. But the reality is, in the accounting world, not all accountants are at that level, right? So we've got, when it comes to people who who wear the title or the name badge of accountant or bookkeeper or whatever that is under that kind of accounting heading, you've got a pretty wide variety of experience and expertise. You've got people who are really accounting experts and can kind of move between systems fairly readily. And you've got people who are what we'd call their clerical support. They do accounting functions, but their understanding of accounting in a broad sense is pretty limited. And when that's the case, when you've got like an army of people out there doing an accounting function that really aren't accountants in terms of their broad understanding of accounting, it's important that it brings the second bullet point into line, which is, if you've got those folks with less experience, you're often, if they've worked in a small business environment, you have a high probability that they have experience with QuickBooks, right? So it's like, well, and that becomes important, right? Like I always laugh when people put on job posting ads for higher level accounting positions that they should have experience with specific accounting software, because it's like, look, if you're hiring for a position at that level, they should be able to get into whatever accounting software you were using, right? But when you're hiring at the clerical level, it is true that because they don't have a broad understanding of the accounting process in general, they may just have an understanding of the software that they've been using for years. Then the fact that you're using a software that's commonly used in the small business environment is helpful to finding that talent that can make your entries if that's what you need, right? So that's my point with this, is that the fact that it's broadly used by accountants can reduce your training time and can allow you, if you're the kind of business that needs or would be using kind of some of that clerical level type of accounting, that sometimes that bookkeeping level of accounting, sometimes as we might call it, if that's something that would be happening in your business, then using a small business system that is commonly used can be helpful in that regard. It's easier to recruit and find people who've had specific experience with it. On the downside, though, with these softwares, they don't usually handle inventory. Well, they don't. Not usually. They just don't. They don't handle inventory well, natively speaking, right? And so, and particularly production-related inventory, they don't handle well natively. And so, but you can overcome that. So what I would point out about this is that a lot of people will basically say, well, you can't even talk about QuickBooks. We don't even want to hear about it because it doesn't handle inventory natively. And it's like, well, hold on for a second. If your business is still a relatively small business, that inventory function maybe could be handled in Excel, and you could still be using accounting for the QuickBooks for the GL. And that could be a very cost-effective and reasonable solution for your small business. Or you could be using a third-party software, a plugin, or some other software, even cloud-based software that is designed and used to manage the inventory, and then plug the net results into QuickBooks as needed, right? So I think whenever you hear somebody who automatically wants to throw QuickBooks or Xero or another small business software package in the trash because their business is too complicated for it and it can't handle inventory, like as that example, I think that's when you probably pause and wonder, well, how broad is this person's experience? Because again, it may be that person who is pushing that idea, it's because they only know how to do it in one way. They haven't seen other ways that this could be done that could be effective for your business or your organization. If you go to the next level, and I often say this, and I mentioned this in the last presentation in our last episode when talking about people first, going to the next level, what we'd call an enterprise resource planning system, an ERP system, is a massive jump. So going from small business grade accounting software as your GL system to an ERP system, it's not a graduated linear path. It's like climbing a huge cliff all at once when you do this. And so, and the thing is that ERP systems are really the GL, the general ledger component that we are talking about from an accounting perspective, is usually just one component of the ERP system, right? The ERP system is used for operations as well as accounting. And it's used, and in that regard, the benefit is that it can help create an easier data flow between your operations, between your production operations department and your accounting department. And also, a lot of times as your company grows, you're going to have a lot of different systems with different information sources, and your ERP system can work like a central hub to bring all that information together for you. And so the goal with an ERP system is that it can reduce overall accounting hours, as well as maybe some operational analysis hours through automation. And the other piece of that is that the ERP system is usually very customizable. Whether you're talking about a NetSuite type of solution or some other kind of solution that I'm not bringing up here, there's lists and lists of possible softwares out there. But whatever they are, typically one of the defining characteristics is their ability to customize the reporting kind of ad nauseum. They can do all kinds of customizations. But the downside of all that is that it comes with significant cost. And that's what I was talking about earlier. It's like when you go from small business software to ERP software, it's like climbing a cliff all at once. And you have a significant cost increase over that business grade accounting software. You usually have more IT requirements, like you have to have either your own IT people, or you have to have IT consultants that are helping you that aren't accountants. They're helping you with setting up servers and helping with software specific implementation issues. And that also goes along with, there's specialized consulting just for that software package. Again, those people may be kind of quasi accountants, like they may have come from the accounting ranks at some point, but they're really like software specialized consultants in whatever that system happens to be. And then, whether it's, they could be SAP consultants, they could be NetSuite consultants, whatever they are. And you often have to use them not just initially at a high cost to get the system installed, but you often need to continue using them on an ongoing basis for dealing with maintenance issues, that things that you didn't know at the beginning that come up later that you have to fix in your system, or that you have to revise or do differently, or maybe there's new system features that have to be customized to your situation that you need them. So that's what I say, kind of maintenance work that you might need them for. And then earlier when I talked about how customizable the ERP could be, the downside of that is it's highly customizable, but it's like customizable in the way that if you know how to do computer programming, you can customize what your computer does too, right? Like, so you need these specialists to come in and like customize the system to write reports for you. It's like, well, I want to run this report that shows this budget to actual number, or whatever thing you were thinking of from an accounting standpoint. It's not like what an accountant would just do in Excel. It's like, okay, let's get the ERP specialist to come in and write up a bunch of code that will allow the system to create that report for you, right? And so that's just to give you all a flavor of what this universe is like when you go from the small business to this. And so I'd say don't jump into this without giving it some serious thought as to whether you're ready for the investment that it's going to take internally and all that external consulting and everything that goes along with it. Okay, so that's my my overview of GL systems. My basic theorem that I'm putting forward here for you all is that in your small businesses, you most likely can use a small business system like a QuickBooks or a Xero, and you might use third-party plugins to help you with the inventory pieces of it. And I would encourage your organizations to use this until you just flat out break it, till you really break it, not just somebody who doesn't know how to do it right, but really you really know for sure you're beyond the limits of what this system, what you can do here. And that usually is going to go along with your business having grown significantly. Like you're getting of a size that's like in the 10 million plus range, and then start looking at, well, do we want to implement an ERP system? And my 10 million number is not magic here, because I've known $20 million companies that don't use ERP systems. So, people who tell you that if your business is larger, a larger business than a few $1 million, you can't use QuickBooks, they're flat out wrong. You can, and many do. And so, really kind of think about what cost you're trying to save. Oh, and before I leave this subtopic here, bridging it back to our last episode when I talked about people first, remember my point here was, because this is such a steep cliff to climb, yes, it can save you a lot of hours through automation, but ask yourself the question of, do you need to do that? Or is it actually more cost effective to just have people work those hours? And my experience is, until you get to a certain inflection point, it often is more cost effective to just let people work more hours and do more manual work than to try to automate it through this kind of system, because of the significant costs involved in this system. Okay, so leaving the GL systems, I just want to talk a little bit about kind of what we see in terms of paying vendors. Again, this could apply to many small businesses, not just craft spirits, but I'm highly in favor of using some sort of bill pay platform. Examples of that, the common examples of that we see right now are things like Bill.com. There's also companies, Melio and Ramp, or a couple other companies. There's others out there that are boutique providers of doing kind of similar things. But let's talk about why a bill payment platform could be helpful. I mean, with what the world has just gone through, and more people working at home and maybe not having access to the physical office to write checks all the time and things, that makes it obvious that being able to process payments remotely has benefits to it. But as we'll talk about here, you could process payments online often through your bank, right? So what's the difference here? What's the importance of a third-party payment platform like this? Well, it's, to me, really the significance is the approval process. It's the way you collaborate with your team, is your company within the business, that makes a bill payment platform helpful. And it provides a digital record of what you're doing. It it stores the invoices electronically so they can be easily seen there. But these systems allow the accounting team to set up the bill, but not have the authorization to actually pay it. It then allows somebody who it allows a manager or a department head that the bill might relate to review it and then approve it and say, yes, this is a spend against my budget that I approve of. And it allows a payer, somebody who's actually a check signer, to authorize the payment. And it can, all those parties can work together in this platform. And to me, that's what the power of these third-party platforms are. Accountants often focus hard on the power of these platforms to sync the data into the GL system. And that is a slick piece, right? You do all that work in the third-party platform, and then it also will sync with your accounting system. And so, like QuickBooks, these systems obviously and smartly sync with QuickBooks as an example. They often sync with Xero and other systems as well. And so you do all this work in the third-party system, and then it will transfer over the accounting for those payables, including the accounting for when an invoice is paid, all over to your GL system. So you're not having to redo the entries in your GL system. And from an accountant's perspective, what I often hear from accountants is that's like the cornerstone of it for them. Like the fact that it will sync the data over. And I've often heard in these situations is that if there's any kind of unusual scenario where it doesn't sync the data over, then a lot of times the accountants will call a halt to the project and be like, well, forget it. Let's not even use the third-party platform because it doesn't sync the data. And I would say I disagree with that. I would say if it doesn't sync the data, that's not as good. But there's still an enormous value in the way the platform allows you to go through the approval process instead of just everybody sending emails around or pieces of paper or whatever else it is your company does. And so I wouldn't just trash can using one of these systems because maybe it doesn't sync with your GL system that well. Remember, that's kind of icing on the cake. To me, the real benefit is how it manages the approval process for you. Of course, if you don't have an approval process, if your business is very small, if it's like I get the invoices myself and then I pay those checks myself, right? You may be able to accomplish the same thing that a bill payment platform would on your bank's website. Because a lot of the banks these days allow direct pay right from their website, right? They allow you to of course, initiate ACH transfers to vendors, but a lot of them also will allow you to send checks. The bank will provide the service of sending a check to your vendor as well, just like these third-party platforms will. And so if your company's small enough that there aren't multiple people involved in the payables process for approvals and all that, then I think just using your bank's website is a reasonable solution. But I just wanted to call that out. That's the difference between the two, right? Is like the difference between just using your bank's website or using one of these platforms is how big of a team do you have working on the payables process? Who all's involved in this? If it's really just the accountant and the owner, or just the owner altogether, then maybe you don't need the payment platform. But once you start having department heads as well as a check signer as well as accountants, this becomes a huge benefit and time saver, in my opinion. Other expense management, we've got for other expense management, things that what I'm talking about here and things that our audience may be familiar with are softwares like Expensify or Concur. These are things that are used to manage expense reimbursement, and the benefits here, I mean, for the employees, it's enormously benefit, right? Because They're not having to keep track of paper receipts and invoices and things like that as they're incurring their meal entertainment type expenses, their travel expenses. They're taking pictures of it on their phone, which is an app that integrates with these systems. And then that uploads it to the system that is linked in with accounting, and they can review those expenses and they can code them to where they go in the accounting system, and they can get authorization from a manager all within the software platform. And then that will sync in, just like I was talking about bill pay platforms. These expense management systems will sync in with the accounting system and will allow for a more automated accounting for it. And I would say this is like table stakes these days, right? A modern company that doesn't have an app deployed for expense reimbursement management is way behind the curve. So, back over here with bill payment platforms, I would still say there's a decent amount of companies that are otherwise up to speed on their accounting processes and haven't done this yet. But almost every company I walk into already has this. And if they don't, they need to get it, because the additional accounting burden, the clerical burden of doing expense management manually, expense reimbursement management manually, is usually too much. I mean, you end up paying for accounting way more than you should. So this is like the opposite of my speech about ERP systems. Here, you really can save a significant amount of people hours by just having an app that does this easily for you. And it's like a slam dunk, and most businesses are doing it. And so if your organization is not doing this yet, you really need to look at it, because you're probably overpaying on the clerical side to deal with the fact that you don't have a good platform for this. Invoicing customers, I'm not going to say too much about this. There are third-party platforms for it, but what I found is that the small business accounting software we talked about earlier can usually do this for you just fine natively, including customizing the look of the invoice and everything. So I don't think there's a lot here in terms of extra tools that you need to consider. You should probably and can use your basic GL software for this. Inventory tracking. Well, you know what? This is a big topic, so let's pause here, and I want to do this in our next episode. So stay tuned for our next episode to talk about inventory tracking, and I want to turn it back over to Tammy and Charlie to kind of see if they agree with some of my points about basic GL systems to ERP systems, bill payment platforms, and expense management. You could talk all three, or you could just pick one to disagree or agree with me on. However you want to tackle that. We'll turn it over to you guys. Charlie, what do you think?
Absolutely. No, I think these are really good points. And these are the exact challenges that I see businesses struggling with all the time. And I think that they give very different answers to how to approach these challenges. And as you said, some of them are utilizing these tools and are really breezing through things that others struggle with and others aren't. Some examples of kind of creative things I've seen used to try to make the GL systems work more like an ERP is just clever reporting, right? Setting things up in such a way so that for example, if you're getting statements on an account that has a certain type of activity in it, utilizing the statement totals to try to determine what entries would go into the accounting can help you save steps from having to parse through all the individual lines that might be on that statement. And so what you see business owners trying to set up creative answers like this to help them just have the accounting flow in a little bit more of an easy way. And if you put in those kinds of solutions, like you said, you can really take a low-cost system and have it be meeting the needs of what other people are often paying a lot more in these higher-end ERP systems. I've also seen this whole this phenomenon you're talking about where basically people will spend more by avoiding the expense management type apps and instead writing the people who are involved. It shows up in a lot of ways. It shows up in the clerical time that's wasted. It shows up in the time that if, for example, let's say you're messaging a partner to get a receipt, if it takes him longer to do it than he would through an app, it's wasting his time too. And it just happens so often. And so I think that having these automated solutions that just help people do their own tasks more easily is just, like you said, it's a slam dunk for so many of these businesses. And then a lot of the players in these spaces tend to know that meaning the companies who are providing these types of services, they kind of know what their value proposition is, and they tend to set up pricing in such a way that you can't really lose. I actually ran into this today with a meeting where basically they were talking about selling a product, and they had gone through the list of common reasons why people would say no to their particular product, which in this case was a payment processor, but the idea still applies, which is that they know what you're throwing away by not using their product, and they structure the offering to ensure that you can look at it and have a good deal. And I found this to be true across a lot of these different service providers. They'll either be free and they'll support themselves through advertising in certain cases, or they'll find other ways to make their money. That makes it a no-brainer for you. So yeah, I think it's a really good thing. What do you think, Timmy?
Yeah, I think I might have said this before, but if I haven't, I'll say it now. Basically, at the end of the day, I've never met anyone who loved every aspect of their ERP system, their accounting system, or another type of software, type of support that's supposed to help, whether it be trying to help with expense reports or trying to help with payments and stuff. So I do think I encourage everyone to kind of keep that in mind in your options. To Ty's point, QuickBooks can do a lot of things, and if your business is operating inventory and you can do it outside of it and you have someone that has a skill set to do that, that's great. That can definitely work. If your inventory process is too complicated and maybe you're spending a lot of time doing things outside the system, maybe think of something else in terms of getting a heavier ERP system. But at the end of the day, an ERP system is going to be expensive, not only in terms of training people to utilize it, ensuring that you have it set up right, but also in that customization. And I've spent a lot of time in my past kind of working with different ERP systems, and when you customize, it's not cheap. And, especially when it's something where it's like a very powerful ERP system or well-known ones can be very hard to customize. So when you do ask for some type of tailored thing that would really, help your business out, and you want to rely on the system to do that, we're talking thousands upon thousands of dollars that could cost you to get that implemented. And then sometimes it'll be even more frustrating when you see that it's rolled out in the next version and now people get that for free. But it is something to kind of think about. So I just want to ensure, everyone that, I'm open to a lot of various different types of systems. I love QuickBooks as much as anybody, and I do like other ERP systems as well. But it is just really thinking about it before pulling the trigger too quick in either direction, either in terms of staying on QuickBooks too long or in making a switch from going from another one to another one and vice versa. So just we kind of keep that in mind, because I've spent a lot of time, like I said, spent a lot of time with a lot of people who say, I hate my system, or if only my system could do X, Y, Z. No system is going to be perfect. And the other thing in terms of the managing of expenses, I do think that is something that is interesting in folks to really consider. If your process is taking too much time and is costing more money to either analyze, process, approve, or pay, or even kind of get it documented, that you might want to consider thinking about paying a little bit of a fee for helping manage that process better, making it more efficient, and still being in compliance with what your policies are.
Awesome. Well, thank you both for your notes on that. So let me kick it back over to Charlie.
Sure, absolutely. I've got a kind of a different article we can talk about. So in the Las Vegas Sun, there's an article called Regulatory Delays Keep Lid on Marijuana Consumption Lounges in Las Vegas. And I thought this was interesting because I know that, as a firm, we work with different marijuana businesses, but it's usually in the kind of producer state of that, of marijuana companies. And so it kind of sets aside this entire other industry that could exist, which is people using lounges for on-site consumption. And so in Nevada, the way it's kind of played out is that the state has legalized recreational marijuana back in 2017, but one of the caveats that it used to do that was that it could only be used in private residences. And there have been, in Las Vegas specifically, there have been a lot of instances of people basically, using marijuana openly on the strip. And there's been kind of complaints about the smell and whatnot is one of the things that came up in the article. And so what's happened is that after months of delay, Nevada's Cannabis Compliance Board in June approved a set of statewide regulations for cannabis lounges, but local jurisdictions can add their own restrictions. So they're kind of giving the local jurisdictions a little bit of say in how this would all play out as well. It talks about an individual marijuana dispensary called Planet 13 that is located on the Strip, and that's working towards kind of becoming one of these cannabis lounges. And so I just thought it was really interesting because, you know, here in Oregon, it's legalized, but there's not any kind of place like this for people to do that. And it presents kind of a few unique challenges. One of the things the article talked about was that they wanted to have it be true that each cannabis consumption lounge would adopt practices that discourage impaired driving. And they talked about that being like, for example, a partnership with a rideshare app to offer discounted rides both to and from the premises. And so I think it's kind of a unique problem and challenge, and it's kind of a unique take on that industry as a whole. And so I wanted to get you guys' take on whether or not you feel that on-site consumption should be an industry at all in this in the field of marijuana, and whether you think this will be something that you start hearing more about in the coming years.
I definitely think it's something you're going to hear about, especially if Las Vegas is able to demonstrate it and pull it off and make it, kind of almost similar to a bar, right? I think that in a lot of senses, those are what the lounges are for. I do think it is an interesting kind of situation because that has been a little bit of the pushback of, yes, it's legal. And a lot of states are like, yeah, we'll make it legal, or it's legal for medical purposes or right. But this might push the boundaries a little bit on that. So I think it'll be slow to kind of come into the various different states. But I do think it'll be interesting to see the success or failure of Las Vegas will be kind of the determination of whether or not we see this more often. But those are just my thoughts. Ty?
Yeah, I'm not against it. I think I guess I'm neutral in terms of how I feel about it. I guess my ad hoc thoughts about it is that it can make it more of a social thing in terms of the recreational side of it, right? And it does feel a little bit weird the way the states kind of made it like, well, we'll make it legal, but you got to do it in your closet, and that kind of. So I think I guess I said I'm neutral, but maybe I'm actually for it. When you think about it in terms of just, it feels a little bit better to me that you could kind of get together in a public venue and it makes it more social and more kind of in the air. Because I think anytime you drive something into some kind of dark corner, that's when problems happen. I think better to have things out in the open as much as possible to alleviate any ancillary issues that might be attached to the consumption or to the industry or to the or any of that, right? What do they say that fresh air is the best, or sunshine's the best antiseptic to problem issues? And I think having it be a public, or at least in a regulated, in a space where it could be a public thing, I don't see as a bad thing. It seems like a good thing. And I'd say I think there's also kind of a parallel issue going on. I know here in Oregon, we've got I'm not well plugged into this, but we got the psilocybin stuff going on, where that's becoming more of a thing that businesses are looking at, and that's the direction that I think they've been going with those, is that basically they've been looking at that and saying, well, it's probably not advisable for somebody to just like take one of those. These are mushrooms, right? It's probably not advisable to just like go grab a mushroom from a dispensary and then take it home by yourself and have that journey on your own. It's thought of as something that is more of a guided experience, is my understanding, and it is more of a communal type thing, right? By its very nature, it's being kind of rolled out that way, from my understanding. So it's interesting to think that cannabis could be thought of in that way as well. They could be thought of in that way together.
Absolutely. I think it'll be interesting to kind of watch both of those industries kind of just evolve as these things keep changing, and we'll definitely be keeping an eye on it here on the podcast. Do you have another article we can talk about, Tammy?
I do. And actually, it's regarding fees again. But if you have been charged a penalty fee for filing your 2019 or 2020 tax returns late, you may be interested in the recent article from Accounting Today. the IRS has announced that they will be providing penalty relief for those that filed their 2019 and 2020 tax returns late. What is the value of the penalty relief? According to the article, the IRS estimates that 1.6 million taxpayers will receive roughly 1.2 billion in the form of refunds or credits. A couple of key things the article shared was that one, the penalty relief will be automatic for people or businesses that qualify, so you don't have to do anything. If you haven't filed your 2019 or 2020 tax returns yet, you will need to do so by September 30th to get the late fees waived. And the third thing is a penalty relief will not be given for those that failed to pay or filed fraudulent returns. So as we discussed in previous podcasts, the IRS has been in a lot of hot water over the past couple of years with the backlog of unprocessed tax returns, sending out notices and collections automatically and way too frequent, and not answering phone calls. So according to this article, the waiving of fees is seen as the latest move to ease tax compliance and hopefully put the IRS in a better light. The IRS did state that waiving the penalties will help them clear the backlog of returns that still need to be processed. I'm not sure how those two are related, so I thought I'd throw it out to you guys as, how is reducing or eliminating these fees going to help them process more of the backlog?
Yeah, I mean, I feel kind of both ways about it because on the one hand, I'm a big nerd and got my taxes done on time. So anybody who's getting their penalties waived is kind of like, getting something that I feel like I just gave up or whatever. So, but, on the flip side, I mean, the IRS can't in good conscience be behind on everything and be terrible at everything that they do. And then at the same time, penalize people for basically doing what I would say they're doing in a lot of ways. As far as how the penalties ignoring penalties might make them able to process returns quicker. I think it just removes one more thing to look at, one more step. But to me, it's all moot because if they can't keep up with the workload as it is, they're removing penalties due to their inability to properly collect and actually act on those penalties. And so, yeah, that's how I look at it. What do you think, Ty?
Well, I think that last piece that you just said is the key to what's going on with this issue, because what I think might be happening here is that people were late. Some people might have been marginally late or may have been late. I mean, we're talking 2019-20, so they could be more than marginally late, but still have filed the returns at this point. And so, but because they were late, the automatic systems at the IRS spit out these penalty notices. And then because the IRS is so far behind on processing anything, they just, now they've already filed and they just keep getting more penalty notices. And it creates a lot of anxiety and frustration and all that. And so I think that maybe part of this is designed to, when we talk about like, how does this have anything to do with the IRS backlog? I think that's part of what it's about, is trying to clean up this kind of hamster wheel of nonstop notices that don't even make sense, because while somebody may have filed late, they actually did file, long time ago at this point, and they're still getting notices as if they didn't, and nobody understands what's going on. And so this can kind of just clear the deck on some of that stuff, I think is part of what's happening there. But what I really learned about this and overall on today's episode is how much Tammy hates penalties and fees, right? So, I mean, just so our audience is clear, she's going to go after and celebrate every time a fee is waived and go after every time a fee is unfairly charged. And I think that's great. But then the other thing I would say for our tax colleagues, I mean, really, like the IRS is saying, okay, you can have these fees waived if you have these tax returns filed by the end of September, and we're now at the end of August. No pressure, everyone. Like, they already have a corporate September 15th deadline and an October 15th deadline for regular taxes. But now everybody who maybe didn't get their tax returns in are going to be calling their favorite tax preparer and saying, hey, I got to get my return in the next 30 days. Good luck with that. And if our industry wasn't already behind in terms of, accountants have had a labor shortage for a while now, and CPA firms in particular are really struggling to keep up with things. And I don't think this helps by saying, you can get a penalty waive, but only if you file by September 30th, when we're only 30 days out from that. So, yeah, man.
And I do agree that I dislike fees quite a bit. And so, yes, I do also want to say, in terms of what Charlie did say, I do think that this is the right step, though, for the IRS, because at the end of the day, their backlog and stuff, and especially with the hamster wheel reference that you just gave, Ty, too, is some of those things they were backlogged anyway. So even if you did turn in your tax return, you wouldn't have been able to get it processed right away, or they wouldn't have even known to do that. Now, that does not mean that it makes it right that you didn't file, comply with the tax regulations and the deadline, which were actually extended for both of those tax periods that they were referring to. But still, I think it is the step in the right direction. And there is a lot of, I'm sure, ease for those who have already filed. And if they were stuck with those automatic notices, that it'll be a lot just cleaner and helpful on that. But yeah, nothing like a little pressure. They only gave a little 30-day window warning for those folks to hurry up and get it done. So hopefully those folks were already partially done, or maybe they're just going to get started, but we'll see. So more to come on that, I suppose.
All right, everybody, that's going to do it for the None of Our Businesses podcast for this week. Thanks for tuning in, and please tune in again next week for more business updates from an accountant's perspective, from 3 accountants' perspective, actually. And if that's not enough, check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to the nonprofit space. All right, thanks, everybody.
Bye.